All right, we always have a lot to talk about when we talk to you two gents, so I'll get straight into it. And of course, we're continuing our series today of what I've called a crash list. Stocks to put on your watch list if there's a share market crash. A lot of the experts are getting concerned that markets are too high at the moment. We're due a major correction. Now, for a lot of us mere mortals in the share market, you go, oh, that's bad news. But for the bright sparks like Luke and Owen and the rest of our expert teams here, they see it as a great way of loading up on stocks that they've been watching for a while, have been too expensive, and when there is a correction or pullback, it's a great time to load up on them. So I've asked each of our panelists over the last 2 weeks to give us a stock on their watch list that they're just itching for a crash in the market to start investing in again. So, Luke, what's your stock that you have on your watch list?
Yeah, look, Koshi, my stock was Xero, and it's a very simple reason. I think the way you described the task was spot on. You create the list of stocks that you think are brilliant businesses, but are just too expensive for you, and Xero is, that's right in that basket for me. But I think it's probably, if not the highest quality stock on the ASX, very close to it. It's easily a software stock you could put up there with any global peer listed on the NASDAQ or anywhere else, developing into a true platform solution as well through the Xero App Store and the different verticals they're able to offer their customers. And it's really interesting to watch this business evolve, where they're seeing which other solutions and products are resonating well with their customers. And when they see them, they're either buying those businesses or developing alternatives in-house. And so they're really just becoming that real crucial software for their customers. But as you said, very expensive on a probably, let's use a revenue basis, about 20, 21 times recurring revenue. But certainly this is one of those stocks that you put on your watch list. If you see that crash, and you can pick it up, maybe even sub $100 or something like that, maybe less than 15 times recurring revenue. I think it's a business perfect for this sort of exercise.
Yep, great company, which I've always thought has been beautifully positioned to set up as a small business bank. They've got all the data on all of the small businesses in Australia and now overseas. It'd be easy to move there. Owen, what's your crash stock?
Yeah, I think that's a great pick, Xero by Luke. I didn't know what he was picking coming in, so that's a great one. My one is actually a company called Pro Medicus, based here out of Melbourne. Yep. Just in terms of the task that we were given, if you could buy one company, I think Pro Medicus would probably be my one. I know you've had Sam Hupert on the program before as an interview, but basically Pro Medicus is a software business for radiology clinics and hospitals. So basically it's created this software called Visage, which allows doctors and radiologists to instantly stream super high resolution images, whether they're in hospitals. They can stream them straight to an iPad or an iPhone, and effectively they clip the ticket as more images are taken. The business is expanding into artificial intelligence. It's one like the Mayo Clinic, amongst others. It's at about, I think, off the top of my head, about 180 times earnings, maybe even more than that now. And it's about $54 a share. I'd probably look to buy it if it could come back to, say, $20. I think that's a realistic valuation for a company like this. But at the end of the day, I've been saying that for a while. We recommended it at $7. I sold some at $13. So this is one that just keeps on going. Great management, cashed up, scalable, lots to like about it. But at the end of the day, it's got the valuation to match.
Yeah. I think you and Claude Walker from A Rich Life rode this one up.
Right.
And much to the chagrin of the rest of us. So for a pullback to the levels you bought in would be very nice indeed, let me tell you. So two good stocks there, Pro Medicus and Xero, to put on our watch list.